So today topic is inheritance tax IHT, and IHT is charged on gift. Whenever you will gift, you have to pay the IHT. Gift can be made on following dates or events: lifetime or at the time of death. So you will gift in your lifetime or at the time of death. And gift can be made to individual and trust. Third paragraph, if a lifetime gift is being given to individual, it is called PET. PET mean potentially exempt transfer. And in lifetime, if you give to trust, it is called CLT, mean chargeable lifetime transfer. PET and CLT short wording is allowed in the exam. So there is no need to write down full name, potentially exempt transfer or chargeable lifetime transfer. You can use the word PET and CLT. So in your lifetime, if you give to individual, it is called PET, and if you give to trust, it is called CLT. And death gift is called death estate. When at the time of death, when you gift your assets, it is called you are gifting the death estate. Obviously, when one person died and all his asset transferred to his children, this is called the gift at the time of death. So death estate you are gifting to your children or anyone. So lifetime gift is patent CLT, death gift is death estate. Now you can see this table is very important, that there are rules, tax rules on this table. There are four columns. First, time of gift or transfer. Gift or transfer, same meaning. Second column, type of gift, mean what to say. Third, whether there is a lifetime tax on this gift. And fourth column, whether any death tax on this gift. So now first column, time of gift mean lifetime. Second, when you gift in your lifetime, in the second column you will see if you give to in lifetime gift to individual is called PET, and gift to trust is called CLT. Third column, on PET there is no tax, no lifetime tax on PET. Cross, you can see the cross in third column. So it cross mean no lifetime tax on the PET. But fourth column, is there any death tax on the PET? Yes, tax can be paid if donor dies within 7 years of gift. If today I am gifting and within 7 years if I die, then that gift, that pet become chargeable at my death. But if I survive after 7 years, then there will be no death tax on pet. Similarly, on CLT, lifetime tax is paid. In third column, you can see that tick. Tick mean you will pay the lifetime tax on CLT. On PET, there is no lifetime tax, but on CLT, lifetime tax you have to pay. And death tax, if donor dies within 7 years of gift, then you will pay the death tax. If you will survive after making this gift after 7 years, then there will be no death tax on CLT. So it means on PET and CLT, death tax will be payable only if you will die within 7 years of making this gift. That's it. Otherwise, no tax. And the third, last, at the time of death, when you gift, it means it is called death estate. And third column, is there any lifetime tax on death estate? No, obviously you are gifting at the time of death. Death estate. So no lifetime tax, only death tax you have to pay. So this is the box we discussed here, the tax rules. And lifetime tax mean lifetime gifts, PET and CLT. There is a separate rule to pay the lifetime tax and death tax. And on death estate, how to pay the death tax, there is a separate rule. So death estate is separate topic, PET and CLT separate topic. Now, firstly, I will discuss how to pay the lifetime tax. Mean on lifetime gifts, PET and CLT today I will discuss, and then after that we will discuss the death estate separately. So lifetime tax. And on CLT you have to pay the lifetime tax on lifetime gift. So I am reading only how to pay the lifetime tax in these notes, but through the question I will tell you how to pay the lifetime tax and that tax through a question. Okay, question is very important. So this theory is only I am reading right now, but through question I will discuss all these points. So lifetime tax, first point, annual exemption of 3000 per year available. Second, unused annual exemption can be carried forward for 1 year. You can carry forward unused to 1 year. And third, lifetime tax rates 20% if donee pay tax and 25% if donor pay tax. And note, if examiner is silent, then assume donee is paying the lifetime tax. And fourth point, IHT rate is zero in nil rate band. Nil rate band is available. So nil means 0% tax. Fifth point, how much nil rate band available for your tax year 2021? It is 3,25,000. It is unchanged in now. Right now, it is also 325 for your tax year 2021. And this nil rate band is given in the tax rate sheet in the exam. And 6 point, nil rate band is reduced by chargeable transfer in last 7 year. Chargeable transfer mean, chargeable mean the transfer mean gift, the gift on which you will pay the IHT. So it can be paid in that time, and it will be CLT also. Chargeable transfer mean on which you have to pay the IHT rates. So it could be PAT and CLT both. Next, residence nil rate band I will discuss with death estate, because this is the topic attached with death estate. So we will discuss it later on. Now death tax. You can see the heading death tax. The death rate is always 40% on gifts. Second point, it is applied on value of gift after annual exemption. Third, any lifetime tax paid will be adjusted for death tax. And fourth, taper relief is also available for death tax. And it depends. There are two columns. How much taper relief available? It depends. There are two columns you can see. First, if died within, and next column, percentage of relief. So first, if you die within 0 to 3 years of gift, you have to write down in front of every column. So if you die within 0 to 3 year of making the gift, 0% taper relief available. If you die within 3 to 4 years of gift, 20% taper relief. 4 to 5 year of gift, if you die, 40% taper relief available. 5 to 6 year of gift, if you die, 60% taper relief available. And 6 to 7 year of gift, if you die, 80% taper relief available. And seven, after 7 years, 7 to infinite year, after 7 year, if you die, then 100% taper relief available. And fifth point, nil rate band concept apply for death tax also. So all these points I will apply through a question, mean how to pay that lifetime tax and death tax on lifetime gifts on PET and CLT. So please write down a question. For example, a person made following gifts. First, a house worth a house. Please give me 1 minute. A house worth 900,000 to trust on 1st January 2004. Second gift mean house you are gifting to trust. It means this is CLT on January 2004. Next, a car worth 200,000 to his son on 1st September 2005. And next paragraph, son mean you are gifting a car to his your son. So this is pet, son is individual, so when you give to individual it is pet. And next paragraph, he died on 1st January 2007, and your requirement is calculate the tax. And when you gift the assets, you have to pay the IHT and CGT both. CGT, I already told you how to pay. Donor and donee, two columns you have to make on the gift. But right now, IHT, I will tell you how to calculate, okay? So there are two gifts, and whenever more than one gifts are given in the question, you have to make a timeline always, and sequence on the timeline. How to write down the gift sequence is, firstly you have to see the dates and sequence you have to follow. Mean 2004 firstly you have to write down, and 2005 after that. Obviously 2004 first and then 2005. If examiner will change the date sequence, maybe he will tell you 2005 gift first and then 2004 gift, but you have to see the sequence 2004 first and 2005 later on, you have to write down, okay? So for example, there are two gifts in this question, and on the timeline, firstly make a timeline, and one by one we are writing down all these gifts. So first, January 04 CLT, January 04 CLT, question mark. Now we have to calculate the value of CLT. So for example, now I am calculating firstly the lifetime tax on this lifetime, all these lifetime gifts. So first gift is gift to trust. Number one, first gift is gift to trust, CLT. Gift date January 04 and tax year is 0304. So firstly tell me what is the value of transfer. Value of transfer mean what is the market value of transfer gift. So you are gifting the asset worth 900,000. This is market value of the gift, value of transfer. In CGT, it will be donor's disposal proceeds and donee's cost. And here in IHT, it is value of transfer less annual exemption of current tax year 0304, 3,000, and previous year 0203 annual exemption brought forward will also be carried forward to you in this tax year. You can use, because in this question 0203 there is no gift, so we have to assume this annual exemption will also be available to you. So now the value of CLT is 894,000. And we have to write down this value on the timeline, 894,000. And after writing this value on the timeline, CLT value, now on the CLT there is a lifetime tax. How to pay the lifetime tax on CLT? Firstly, the second step is to check the nil rate band availability and then apply the rates on this CLT. So Second step, to check the nil NRB availability, you have to check nil rate band availability in tax year 0304 when you make this gift. And 0304 nil rate band will be given in the tax rate sheet in the exam. I am assuming, for example, the nil rate band is 255,000. I am assuming only, but you have to see it from your tax rate sheet. And if 0304 rates are not given in the sheet, then you have to assume 2021, this tax year, 3,25,000 you have to use. Okay. So less last 7 years chargeable transfer. And whenever you will go back last 7 year and see the chargeable transfer from gift date, you have to go back always. Gift date mean on which you are paying the tax today, and today gift date is CLT date, and you make this CLT in January 04. So go to the timeline, and from January 04, from gift date, go back last 7 year and see any chargeable transfer is given. No, I cannot see any PET and CLT in previous. PET, obviously PET is not chargeable in lifetime, so only you have to see the CLT in lifetime. Chargeable transfer is CLT in lifetime. And at the time of death, PET and CLT both could be chargeable transfer. But right now there is no CLT in previous 7 years. So no chargeable transfer in last 7 year of gift date. So available NRB is 255,000. So full nil rate band available. Now pay the tax on CLT. And value of CLT is 894,000, and up till nil rate band 255,000, rate is 0% is equal to 0. And balancing figure 639 at the rate of 20%, because if examiner is silent, always assume donee is paying lifetime tax. So if donee is paying, rate is 20%. So 127,800 is your lifetime tax on CLT. That's it. Now go to the timeline and mention the second gift date. And second gift, car worth 200,000 to his son on 1st September 05. So September 2005 pet, because this is a pet. Again question mark. Now you have to calculate the value of pet and write down on the timeline. So second gift is gift to son. It is pet, September 05, tax year 0506. Now, what is the value of transfer? Market value of gift is 200,000, less annual exemption of current year 0506, 3,000, and previous year 0405. Obviously, there is no gift in 0405 in this question. Assume it is available to you. So the value of PET is 194,000. And there you have to just right now, there is no lifetime tax on pet. No lifetime tax, because IHT is exempt on the pet. No tax, no lifetime tax. So just write down the value 194 on timeline. 194,000. That's it. Now, after this gift, he died. So, death date you have to mention on the timeline. And death date is January 07. This is death date. And when one person died, on the death date, you have to go back from death date. You have to go back last 7 years and see which pet and CLT is within 7 year of the death. So I can see both 2004 and 2005 is within 7 year of this death date. It means on both PET and CLT, you have to pay the death tax. Okay. So firstly, you will see from death date, go back 7 year, and which PET and CLT is within 7 year of death. In this question, both patent CLT are within 7 years of death. That's why we have to pay death tax on both gifts. Okay. Now go next. Now we are calculating the death tax on both lifetime gifts. And death date is uh, he died in which date? Death date? January 07. January 07 death date, tax year 0607. This is death tax year. And same timeline, you just copy paste again. Same at the time of death, firstly just copy paste the same death timeline. So timeline, first January 04 CLT and value 894,000. Next September 05 and it is pet and the value is 194,000. And next he died in January 07 death. Now you go back 7 year and check which patent CLT is within 7 year, and in this question both are within 7 year of death. That's why one by one we will pay the death tax on these both. So firstly choose number one from timeline January 04 CLT value 894 as it is. I just make this heading from the timeline. Now I am paying the death tax. So before paying the death tax on this CLT 894 value, firstly you have to check the nil rate band availability on death year. Why death year? Because you are calculating the death tax right now on this CLT. So death year is 0607, and same from the tax rate sheet, nil rate band sheet will be available in the question. And you have to see in the list the nil rate band for this tax year is 300,000 less last 7 years chargeable transfer. And from gift date you always go back, and today you are paying the death tax on CLT and you made this CLT in January 04. So gift date is January 04. Go to the timeline from January 04, go back 7 year. Can you see any pet and CLT, any chargeable transfer? No. So there is no chargeable transfer in last 7 year. So available NRB is 300,000 full. Now pay the debt tax on 894,000, out of which three up till nil rate band 300,000 rate is 0% is equal to 0, and remaining balance 594,000 at the rate of 40% because death rate is 40%. So 237,600 is your death tax on CLT, and this death tax will be reduced by the taper relief. And taper relief, you have to check the gap between gift date, the CLT date, and death date. And in this question there is gap between gift date and death date is 4 to 5 years. You die within 4 to 5 years of gift. So 40% taper relief available. Take that 40% of 237,600. So it is 95040. Deduct it, and also deduct the lifetime tax, mean already paid tax. Already paid mean a lifetime tax which already you paid on this CLT. So it already you paid 127,800 lifetime tax. So deduct it from that tax, and remaining IHT payable at the time of death is 14760. If your answer is negative at the time of death, negative mean IHT refundable from HMRC. And remember, if answer is negative at the time of death, answer can never be negative, it will be 0. If your answer is negative, you have to write down 0, because IHT will not be refundable at the time of death. Okay, just remember IHT will not be refundable from HMRC at the time of death. If answer is negative, just write down 0. That's the rule. But here answer is positive, it means you have to pay the IHT to HMRC, tax department. That's it. Now go to the second gift from timeline. Just choose the second September 05 pet, and 194,000 is the value. So on this value, you have to pay the death tax. Before paying the death tax, again check the NRB availability on death year, because you are calculating the death tax on this lifetime gift pet. And death year is 0607, and nil rate band is 300,000. Less last 7 years chargeable transfer. And from which date you go back? Always from gift date on which you are paying the tax today. And gift date is pet date, means September 05. Go to the timeline from September 5, go back 7 year. And can you see any chargeable transfer? Yes, 894,000 from timeline. You can see the CLT chargeable transfer from this pet date. So deduct it, and available NRV will be 0, because all consumed by this CLT at 94,000. So now pay the tax on 194,000 value of PET at the rate of 40% debt tax, because nil rate band already used. So debt tax on this PET is 77600. And chargeable transfer means on which this step rates you will apply, this will be chargeable transfer. It can be PET or CLT. So PET, on PET you are paying the debt tax, and rate of tax you are applying on the value of PET. So it is chargeable. PET is chargeable at the time of death now. Okay, so chargeable transfer mean on which this rate step you will apply. So this tax will be reduced by the paper relief. And 2 to 3 years you are dying within making the gift. So first 3 years 0% taper relief, 0, less already paid tax. And there is no lifetime tax on SPET, 0 lifetime tax you paid already. So IHT payable at the time of death is 77600. And question is complete. So that's how you will pay the IHT on uh, PET and CLT. So one new thing I just want to tell here is, for example, in the question, if examiner will mention, if donor pay the lifetime tax, then rate is 25%. And if examiner will mention, if donor is paying the lifetime tax, then you just make a change, and you know normally you are writing the value of CLT on timeline. Which value? In here you will go back, and 894,000 value of CLT you just mention on the timeline. But if examiner will mention donor is paying lifetime tax, then this 894 value of CLT you will not mention on the timeline. you know Gross value of CLT you just mention on the timeline if donor pay the lifetime tax. Gross mean you have to add the IHT tax in this 894,000 CLT value and make it gross CLT. Gross mean in which tax, IHT tax is included. So gross CLT, how to calculate? Same question. The already your tax is 127,800 in this question. So now you have to check the what is the gross CLT value. CLT is 894,000 plus IHT 127,800 you are paying. So is equal to the answer. This answer you will mention on the timeline instead of 894,000. When donor will pay lifetime tax, this 894 you will never mention on the timeline. Just gross value of CLT you have to mention. Mean in this 894 you have to add the IHT, and this value you will mention on the timeline, and on this gross CLT value you will pay the death tax. That's it. So this is the rule. Now the next topic is death estate. Death estate, it is the wealth owned by a person at the time of death. I mean, when one person died, he left his estate. So this is called death estate. And death estate is treated as gift at death date. Mean you are gifting the asset at the time of death. So death estate means gift at the time of death date. How to calculate the death estate? There is a performa. You just add the assets of the deceased person, less liabilities, less funeral expenses, and then total death estate given. And from this, less give to exempt party, and then you will get the chargeable death estate. So this is the performer of death estate, how to calculate it. Asset, less liabilities, less funeral expenses, and total death estate. And from total death estate, deduct the gift to exempt party, and then chargeable death estate arise. Now, give to exempt party. Which parties are exempt in IHT? I mean, when you give to these exempt parties, there is no IHT. So, there are four parties which are exempt. When you give to these parties, there is no IHT payable, exempt. So, first, gift between spouses. I mean, husband and wife, when gift to each other, there is no IHT. So next paragraph, if transfer spouse is domiciled in the UK, but the transferee spouse is not domiciled in the UK, the exemption is limited to cumulative total of 3,25,000, and excess will be PET. Means transferee spouse mean who is receiving the gift. Okay. So if transferee spouse is not domiciled in the UK, then 3 up till 3,25,000 gift is exempt. Excess will be treated as normal pet lifetime gift, and normal rule will apply. How to calculate the tax on pet, I already told you in the above question. So up till 325 exempt, and excess will be normal lifetime gift pet, and you have to pay the tax in normal way, just like pet. Second, gift to charity is exempt, no IHT. Third, political party which has at least one elected nomination. When you give to political party, exempt. When you give to charity, exempt. And fourth, when you give to national body or national institution, just like museum or art galleries, exempt. So when you give these four parties, there is no IHT exempt. Now next heading, valuation, mean which value of assets you have to put in the death estate performer. So number one, all assets are recorded at market value in the death estate performer. Second point, if a person left shares, then the shares value lower off you have to record in the death estate. Lower of quarter of rule, lower formula is lower quotation plus into higher quotation minus lower divided by 4. And average bargains means lowest bargain plus highest bargain divided by 2. These will be given in the exam bargains prices. So choose the lower of A and B, and that will be per share price. When you multiply it with number of shares, then you will get the value of shares. Third, if the deceased person have some loan notes or shares, then loan notes and shares are always valued at cum value. Cum mean One is X value and one is come value. X mean excluded, dividends are excluded, but you will add come value in the death estate. Mean you have to add the dividend and then come value you have to put in the death estate performer. So add the dividends. Fourth point, mutual fund units are valued at lower bid price. Lower bid price will be given in the exam, just put in the death estate performer. Fifth, insurance policy. If a person has life insurance policy, then it is valued at amount receivable. So when he died, and insurance company, whatever amount insurance company will give, he just put in the death estate performer. But next, but if a policy was to be matured at someone else's death, then it is valued at market value. Means if, for example, the person will make the life insurance policy on his wife's name, but now he died, then market value you will put in the performer. Next, well, liabilities. Mean which liabilities you have to deduct from the death estate performer. So all debts are deducted except endowment mortgage. Endowment mean insured mortgage, mean insurance company will pay this liability. And illegal debt, just like gambling. So these two names don't deduct. All other liabilities of the deceased person deduct from the assets. That's it. That is the performer of death estate. And residence nil rate band is always available to this person on the death estate. Residence nil rate band always available on the death estate. I will discuss the residence nil rate band separately, but I want to discuss a question with you on the death estate, so you will have an idea how to calculate the death estate. So 1 minute, hold on.